Hello, everyone, and welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Tom Stever, and joining me from the University of Missouri is livestock economist Scott Brown. Scott, welcome.
Good afternoon, Tom.
Well, today we are, of course, talking about livestock and what happened this past week. There was some toughness in the futures market for both lean hogs and cattle, but we can start out by saying hogs were just a touch higher. Cash hogs.
That's right, Tom. If you look at markets this week on the cash side, I'd call cash hogs up about 65 cents for the week, which in many ways pretty good week for cash hog prices when you realize that pork cutout value fell more than $4 this week. That's a pork cutout value now that's about 8% below where we were a year ago at this time, and we can thank one thing for that for the most part. We talked about all of 2017 how strong pork belly prices have been. Yet as we go here in 2018, we've really lost some of that strength. Pork belly prices off about 17 cents, and we frankly lost another 11 cents today on those belly prices. So it's now a belly price almost 30% below where we were a year ago at this time. So 2017, we were talking about belly prices at $1.80, and today we're talking about $1.15. So I think a lot of that weakness in pork cutout value is certainly related to that. On the cattle side as well, cash cattle, fed cattle, I'd say we're up $1 this week. Feeder cattle, we'll call them steady to 3 lower. A lot of lightweight calves still coming off a wheat pasture, I think, that keeps feeder cattle supplies fairly strong. If you look at that choice beef cutout value, it was fairly flat this week. We lost in chucks and rounds while we gained in ribs and briskets, for example, but not a lot of change there. Yet that choice beef cutout value still runs about 10% above where we were a year ago at this time. That's a real difference between cattle and hog markets in particular, or beef and pork, I should say. Yet on futures markets, I think as we watch the stock market continue its unravel here this week, futures markets as well for livestock products also came down, with current contract live cattle down $2.50, feeder cattle down $5, and that current lean hog futures contract down $4.50. So it was a tough market in the futures pits this week, and I would say the decline in the stock market just led much of what happened there on that side of the picture.
Just makes traders a little bit nervous, does it?
It's going to be interesting to see what we do next week after we've seen this kind of decline looking ahead. But certainly a lot of nervous folks out there, I would say.
Yeah. Monthly trade data came out, and actually there's some positive news there.
Absolutely. We ought to be cheerleading about just how strong exports have been. Thank goodness we can talk about, I'll talk about the records to begin with. Number one, record export volume in 2017, and pretty sure we got a record export value on the beef side in 2017. So very, very good news there. On the volume side of beef, we were up in December about 2.5% relative to a year ago. On the annual quantity side, that's probably the second highest since our BSE outbreak in the early 2000s. But on the pork side, again, a record level for 2017. Value was much higher as well. On the beef side, we were up about 11% on the value side, just reminding me just how strong demand for beef has been in the world and what folks have been willing to pay for that. So we just can't ask for a much better into 2017 for both beef and pork exports. I'll continue to remind us as we look ahead. In 2018, we need that same strength yet again, given what we're going to do on the supply side of domestic meat production.
I was talking to Dan Hallstrom of the U.S. Meat Export Federation, and he says that he's confident about what 2018 will show for beef and pork exports as well.
Yeah, so I think we've started, as we've looked at some of the weekly data, started fairly well here in 2018. I think when you look at the Asian markets, we're starting to see some growth, more growth on the China side in terms of beef exports. I think there's some reason to be pretty optimistic. Of course, we still have, some trade agreement issues hanging out there in front of us that we don't really know what the end has in sight. I remind us, you look at China, for example, and they've imposed some higher tariffs on sorghum of late that I think will be tough on sorghum markets here in the United States. But of course, NAFTA as well hangs over us. If we were to pull out of a NAFTA agreement, I think we certainly know that would be one of the negatives that could unfold for us in 2018.
Who knows how it's going to turn out, but the USDA says farm income for 2018 will be down again.
Yes, that's right. Starting to get USDA's first 2018 estimate out this week. They say farm income is going to fall below $60 billion for 2018. And I just remind us, 2013 was that record level of farm income at nearly $124 billion. So we've fallen by more than half. I like to remind folks all the time, when's the last time you thought about another industry that saw their income fall in half in what's a 5-year period of time? The nearly 7% drop they forecast for 2018 just continues to remind us that things are getting tighter in terms of U.S. agriculture. I'm not certain that we're anywhere near where we were in the 1980s yet, because we still see fairly low debt to asset ratios in the current outlook as well. So certainly tough in terms of cash flow, but maybe certainly not back to the 1980s yet. So we'll just kind of see how things unfold. But that news isn't so positive as we look at, again, what USDA tells us on farm income here.
The WASDA report always gets a lot of attention, and of course that came out this past week as well. What did it show?
Yeah, so a few things. I start on the feed cost side for just a second and say USDA up the midpoint of the corn price range by a nickel, increased their soy meal price range by $5 a ton. So we're getting slightly higher feed costs, but still very reasonable. We did see out of USDA this week a 35 million pound reduction in beef production for 2018. I think most of that is a result of what we got out of the cattle inventory report last week, where we started to see some pullback in terms of cattle supplies outside of feed yards right now that I think many hope will keep beef production in check in the second half. We did see USDA also get stronger in terms of beef net exports. They're up about 40 million pounds in 2018, again suggesting some strong growth maybe is ahead on the beef side. USDA also lowered pork production in this round by about 75 million pounds. So both beef and pork production estimates trimmed a little bit here in 2018. On the price side, USDA actually raised prices, midpoints for fed steers $1.50 and hog prices 50 cents. So as they trimmed on production, we also got them to raise prices a little bit in this forecast, suggesting maybe 2018 will be a better year on the price side than we think at this point.
Yeah. Well, we can hope for that. This coming week, we're going to find out how consumers feel. We'll get the consumer sentiment report as well as retail prices. What do you look for in those?
Well, so let's hope that consumer sentiment stays strong, Tom, as we look ahead. I remind myself all the time that USDA right now is forecasting for 2018 per capita consumption nearly 223 pounds, which is going to be a record in terms of per capita consumption of meat products. So let's hope that consumer sentiment stays strong. It certainly has as we've started the year. On the retail price side, I going to be curious to watch and see if we continue to see some lower retail bacon prices, for example. Certainly pork bellies are suggesting weakness. So important gauge of where consumers are at, I guess, out of those pair of reports next week.
Well, Scott, you have a good week.
Thank you, Tom.
Yeah. We'll talk to you next Friday, Scott. And to get our weekly livestock market update every Saturday morning, you can go to our website, brownfieldagnews.com. Click on the subscribe link, and you can also submit questions that you can get to us as well at the same link. Also, check out John Perkins' twice daily Market Minute. You can check that out at brownfieldagnews.com. We'll talk to you again. I'm Tom Stever on Brownfield.